In the Black Finance family, Ron here for the February 12th edition of In the Black Finance. Hope you're enjoying the conversation so far. I'm here once again to bring you the news from the business and finance world. So let's get into it. Number one, the Fed holds again. So the Federal Reserve once again held interest rates steady at 3.5 to 3.75%, which reiterated the future rate moves depends on inflation and jobs data. In the post-meeting remarks, Chair Powell emphasized that inflation is coming down, but progress is uneven, especially in shelter and service prices. So borrowing costs haven't gotten cheaper yet. It hasn't really cascaded quite that far, but they're also, of course, not going up. That's good for business planning budgets, small business borrowing, and anybody shopping for, of course, mortgages and lines of credit. Number two, inflation signals mixed. So some softness, but some stickiness. The latest inflation data shows signs of cooling, particularly in goods, where shelter and rents remain sticky. So overall inflation is trending lower compared to a year ago, but it's not collapsing. So cooler inflation gives the Fed breathing room, but it also keeps consumer price pressure on things people actually buy every day, which is housing and services. Number three, consumer spending holds up, but retail sales are solid. So December retail sales data came in stronger than expected, with notable gains in online and dining transactions. So holiday spend carried into the new year, and surveys show customers still opening wallets on experiences. So consumer spending accounts for more than 2/3 of the U.S. GDP. So when people keep buying, businesses usually follow. It tempers recession risk and supports Main Street operators. So we'll see. I really want to see as we get into the spring. Number four, jobs. So new figures showed private hiring slowed this week and initial jobless claims crept higher. Still historically low, but hinting at a cooler labor market than this time last year. So a soft labor market reduces wage pressure on prices, but it also causes cautious hiring, especially in small and mid-sized businesses. Number five, mortgages. So 30-year mortgage has been holding near the mid 6% range as an interest rate, keeping affordability tight for buyers. Existing home sales ticked up recently. Of course, they do coming out of the holidays, but new contracts and inventory remain sluggish. So number six, gas and living costs. So natural gas prices held in the mid $2 per gallon range, a real relief for commuting, delivery services, and small business logistics. Utilities and energy prices also surprised softer this week than expectations. So lower energy costs free up cash in household and business budgets, but that extra liquidity often flows back into spending or investment. Number seven, small business optimism. So surveys show small business confidence edged up this week, even amid economic uncertainty. Key concerns remain labor quality and supply cost, but owners are more confident heading into Q2 than a month ago. So small businesses are the engine, of course, of the U.S. economy. When owners feel cautiously optimistic, they're more likely to invest, hire, and expand operations. So we'll see if that continues on or even increases. And then number eight, major corporate sector news. So there's some tech layoffs. Several tech companies announced layoffs or higher slowdowns this week, including cuts in AI and software divisions. These shifts reflect ongoing rebalancing after the pandemic hiring surge. So tech employment impacts consumer spending, commercial lease demand, and household finances, especially in some of the major metro centers. And it's going to be interesting to see what happens with these data centers that's springing up, including right here in my backyard here in Memphis. So big bank earnings season, of course, has kicked off. JP Morgan, Bank of America, and other large banks have begun releasing their Q4 results. Early trends show strong net interest income, moderate loan growth, and cautious forecasts. So bank earnings could be a proxy for economic confidence. Strong lending income shows demand for credit is still meaningful. So that's the updates for this week. Let's get back to the conversation in the room. Appreciate everybody who has stopped in and continues to support In the Black Finance.